Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about gold today. I'm in the middle of filming for our course. Actually, there's a bonus course coming to everyone that has the real estate crash course, how to prepare for it. It's about gold actually. And I stopped right afterwards. I said, you know what, let me do a video. Not the same, it's a lot more in depth on the course for all my students. That's going to be coming out in a couple weeks, everyone. I want to talk about the gold to the Case-Shiller home price index. And we're going to talk about a story that's out of the Financial Times. I'm going to share a couple of charts with you because I think it's very, very important that people understand this, because a lot of people expect gold to go to $10, $20, $50,000. Will it go there? Eventually, someday. It's absolute. Why? Because fiat currency gets destroyed over time because more and more of it is printed. So that's just the normal evolution of the gold price when you price it in dollars. Now, I will say this, if you're looking for a company to trust, there is a company, I put the link down in the description below, to a company I trust to buy gold and silver and take physical delivery of it. They can also set up vaulting, but also have the real estate crash course, the last day of the Black Friday sale down below too. Now, people expect these things to happen overnight. They never do. But I'm going to show you on a chart of something that did happen. It felt like overnight, but it actually took a couple of years. And if you missed it, you missed out on a golden opportunity. There's no other way of putting it. But let's start with the price of gold. This story out of the Financial Times just came out. Gold price hit 6-month high as investors bet on rate cuts. See, that's the actual ordinary thing. When rates get cut, it's because things are really bad. When rates get cut, it means that the government and the Federal Reserve are both trying to stimulate the economy because everything's dead, it's flatlined. So as everybody's hoping for rate cuts, I just want you to know they are absolutely not going to happen until the back of the economy is broken. And then it is very obvious. Stocks will be falling, home prices will be falling. That's when they lower rates. So everyone seems to think that they're going to lower them really quick, but yet Jerome Powell has been very, very adamant of saying he's not going to be lowering anytime soon. As a matter of fact, he's going to be holding them higher for longer. And in the course, I teach people how to identify where we are in that cycle. It's actually very easy to find out. But the gold price is actually quite strong. It says the sliding dollar and growing expectations that interest rates will fall next year drive strong rally in the yellow metal. The price of gold rose to a 6-month high on Monday, buoyed by growing conviction among investors that the U.S. Federal Reserve has finished raising interest rates and a weaker dollar. Spot gold prices rose 0.6% to $2,014 per troy ounce. You know, I've been talking about gold, well, ever since the channel started, and it was sitting around a price of $1,500. Now, by any means, it's not the greatest investment ever. It hasn't gone up crazy, right? It's went from $1,500 since I started the channel three and a half years ago to about where it is now, to $2,000, right? People that own it understand the reason why they would own it. And it's about to become glaringly obvious, for lack of better terms, as 2024 progresses into more bank failures, more governments walking away from the dollar. Argentina is not gonna float our boat, just to let you know. It says the move took the precious metals gains since hitting a 7-month low at the start of October to just over 10% and left it around 3% below the all-time high reached in August of 2020. It later fell back to trade around $2,010. Gold's ascent has been supported by a sliding dollar, which has declined about 3% against a basket of 6 peers in November. That meaning buying the precious metal is cheaper for investors holding other currencies. Soft economic data in the U.S. has also strengthened expectations that interest rates will not rise any further this year and will be cut next year. Again, I do not believe that unless there is a head fake, which could happen. But my point being is that if rates were to drop, it would only buoy gold higher. It would only push it higher, stronger. And what we're about to talk about with real estate and how it plays into the real estate market is amazing. Yields on rate-sensitive 2-year treasuries have fallen from 5.2% to their highest level, which was their highest level since 2006, in mid-October to 4.94%. Gold does not pay any income and therefore looks relatively less attractive when rates are high, but more attractive when rates fall. Now, it's interesting that they talk about the 10-year bond hitting its all-time high recently, and it hadn't been at that high since 2006. So let's jump into a couple things. I'm going to share with you a chart of the gold price. We're going to talk about 2006 because it's very, very, very important. All right. So 2006, the gold price. You'll see right where my cursor is. There's about 2006. Gold was sitting at $700. Now, when it topped in 2006 it actually topped right above $1,000. It was like $1,000.20 in January of 2006. You can see it sort of near where my cursor is. You can see that it dropped, and it actually dropped from $1,000. You see where the cursor is? Down to, it was $760, I think, give or take a few bucks. That was a big drop in percentage, right? Well, at the same time, the stock market was starting to tank. People were diving into the bond market. Bond rates were dumping, so the 10-year rate was falling. Mortgage rates were falling, but it was also because not only were stocks falling, housing prices were falling, right? Then you could see as it bottomed in October of 2008. It bottomed in October of 2008, right there. And then it went up to here. Now, what most people didn't pay attention to was during that amount of time when it went from $750, $760 to an all-time high at that point of around $1,960. Most people didn't care. If you didn't own gold, why would you care about the price of gold? It's like people that don't care about the price of Bitcoin. The only people that care about the price of Bitcoin are people that own Bitcoin, right? So when gold went from $750 to $1,900, people made almost 3 times their money, right? Like 2.5 times their money. In that amount of time, real estate collapsed in price. Now let's go check out the Case-Shiller Index versus gold. And this is what's really important to look at. See that little box right there? That's 2006. The black line represents real estate prices. See how they just gradually came up right here, and then they topped in 2006 and just dropped a little bit? That was the Great Recession. That was the drop in real estate prices across the country. If you didn't lose a house, more than likely someone you knew or your parents lost a house during that time, right? Values plummeted. As a matter of fact, in my area in California, my house dropped 46% from peak to trough. But you just look at that black line and you go, that's not that big of a deal. Now the yellow line is gold. Now you can notice that as real estate prices were heading up in 2004, 2005, gold was also rising. Well, it's actually very easy to explain this. You see, gold was rising because traders in gold were anticipating rates coming down. You see, the Fed started raising rates incrementally, called the dot plot plan. About every quarter, they would raise it 25 basis points, or maybe every other quarter. Point being is that after a while, it topped out, and we had the exact same thing happening today that we did back then. And that was, we had a housing crisis. All of the fools that were trying to buy a home that finally figured it out, okay, I better get off my butt and buy a house because things are getting nuts. They FOMO'd in. They were completely caught naked when the water receded. And you notice that gold started rising about 2005 because they were betting, okay, they're going to start lowering rates. And when they start lowering rates, that's when gold went gangbusters. At the same time, the price of gold was skyrocketing. The price of real estate was dropping. So it's very easy. You know, so many people ask me, how much money do I need, Ninja, to take advantage of this? Honestly, you don't need much. You see, the same government loans that created that crisis, the 3% and even 0% home loans that were blowing up the real estate market in 2002, 2003, 2004, and 2005 were still alive in 2008, 2009, 2010. The only reason most people couldn't take advantage of it because they had simply missed a credit card payment, or maybe 2, or maybe they're behind in their vehicle payment one time. Maybe they had to stop paying their mortgage. Point being is that their credit was not within the government standards. You see, the loans were always there. They were only there for people that kept their credit right, which means you were still able to walk into a house for 0 or barely any money down. That's what makes crashes. So many people focus on, it takes a lot of money to make money. It actually doesn't. It takes the proper opportunity to make money. This gold to home price ratio is just yet one more example of how you could take money right now. This isn't financial advice, I'm not a financial advisor. I'm using the Case-Shiller to gold home price index as an example and level up. Now, the one thing I want you to understand that has never happened, this has never happened. This is exciting. I don't care about a $10,000 or $20,000 gold price. Honestly, I'd be super stoked at 3,000. Why? Because all I care about is the ratio of gold or silver compared to homes. Because buying real estate is the greatest and the fastest way of growing wealth, not only in appreciation in the right time of the cycle, but also because of the cash flow it's produced and the tax write-offs. The ability to pay little or no money in tax because of depreciation tax rules is an amazing thing, right? This is what I want to point out. The gold price has went up and is up here. It is, for the first time since the 70s, risen in concurrently and is holding with, prior to, and with the rise in home prices. Now, to everybody that has the real estate crash course, how to prepare for it, and the bonus courses, you'll see I go into what this is right here. This little swell. And it's very important because history absolutely does repeat itself. And that's why I put out these bonus lessons. Look, I think that this is a great time to own gold. That's just me. I'm not a financial advisor. I'm a dude with a bro hawk and a dream. That does take my coursework a lot more serious than the channel. I'm sorry, but it's true. But the fact of the matter is, if you want to take advantage of this, you just need to start investing in yourself and saving. You just need to prepare your balance sheet. You need to get ready with some inflation hedges, like what's going on right now with gold. Don't look at the $5,000, $10,000 numbers. It's not a get rich quick overnight, but this will help you level up in the real estate game. Look, the Black Friday deal is done tomorrow morning, whenever Cyber Monday's over. Link's down below. There's also a link to gold if you want to buy some gold. If not, it's an affiliate link. You can go get, just shop around. Get the cheapest prices possible and get it from a reputable dealer, because when you have things shipped to you, you want to make sure it shows up and it is what it is. So that's why I put that link down, because I've vetted them and I trust them. I hope you have a great day. Let me know down below what you're into. Are you holding gold to buy real estate? Are you holding gold for those big numbers? Let me know, and if it's okay if we disagree, but I'm really excited for this next cycle. With that being said, the Economic Ninja is out.